And in 24 hours, we're about to have a massive earnings surprise. And I think this part is going to come from other sections of the business that are not necessarily as well understood by Wall Street. So without further ado, revenues are expected to come at $27.3 billion. And you can see it visually here. It's going to drop a little bit from the 24 billion that we had in Q4. And this is going to be not too much of a surprise, in my opinion. And the reason for that is because we already have ASPs, because SAC told us that it's not going to drop below 47K, and we already have deliveries. So you put those two together, you have a pretty good idea of what revenues are going to be like. So let's go to earnings now. And earnings is a pretty similar story. We're about to come in this direction right here, estimated to have $2.7 billion in net income. And this translates to $0.86 on EPS. And the reason this is also unlikely to beat is because Wall Street already understands this trend really well. They have pretty good way of sort of like understanding the auto side of the business and just coming up with these numbers right here. So this could beat, but it is not as likely. And if it does surprise, probably it's not gonna come from the auto business. So this graph right here is Tesla's auto margins. It's not just the regular auto margins. This is auto margins without credits and without leases. And this is what most people, most investors, and most analysts pay attention to. This is by far the most important metric that we're gonna get in terms of Q1. And as you can see, in Q1, we're expecting to have a 21% auto gross margins, X credits and X leases, right? So this was as high as 30% back in Q1 of 2022, and it's about to come at 21%. SAC also told us that this wouldn't come below 20%. That's why the street is expecting a 20% auto margins. But this is what's gonna move the stock tomorrow if it comes up or below that 21% line. But I don't think this is gonna be a surprise either. Maybe it will, maybe it won't, but people are paying too much attention to this metric. It's very unlikely that somebody's gonna slip in this way. So another one that is pretty important is the average selling price. And we can see it right here. This is average selling price for auto, so not the energy side of things. But we can see that at the peak, we're about a 55K. And we've been dropping. I mean, we're expected to now come at 47K. But this has always been the mission, right? Like drop prices, make it more affordable for everybody. But this comes with a little bit of consequences, right? If you drop from 55 to 47K, margins are gonna suffer in the meantime. But if you can manage to sell significantly more units, you can sort of compensate in that way. But I don't think this is also gonna be a surprise because it's too well understood, and SAC already spoiled this for us in Q4. So this, I believe, is the thing that could actually massively beat for Tesla, and it's the energy side of things. Notice that unlike some of the other metrics, energy has been on a massive uptrend since Q1 of last year. Look at this. This is one of the most impressive trends for Tesla that I've seen in the last, I don't know how many years. Look at this stuff. This is reminiscent of what started to happen in 2019 when they finished scaling Model 3 production and they started going into Model Y. And all of a sudden, revenue just exploded, and with that, net income exploded. And that's how we got a company that was worth $50 billion turned into a $1 trillion company. It's exactly the same thing as this, just on a slightly bigger scale. Why would energy all of a sudden be this behemoth that is just exploding? Well, the reason for that is Megapack, right? We just started to get a glimpse of what the Megapack ramp looks like and what kind of consequences that will have for Tesla's business. And notice that Tesla has no competition in grid scale utility storage. Even a company like Enphase just does microinverters. They don't do grid scale energy solutions like Tesla does. So Tesla is essentially unchallenged in the Megapack, the same way that they were unchallenged when they started ramping Model Y and Model 3, right? We all remember the days of the Taycan and the days of the Jaguar I-Pace and all that. Those were not really competitors, and neither do we have competitors right now, but at least we have people in the market, right? But for energy, grid scales, and utilities don't work like that. They don't work in the same business cycles that a consumer product like autos does. So this will cause what I believe is going to be the most likely metric to surprise in Q1. I think people are going to be shocked, to be honest. I'm doing a little bit of work also on the services side of things, because I think services is also pretty overlooked and it's also growing pretty fast, because there's a bunch of things put together, right? Like insurance, even the FSD subscription, premium connectivity, everything is thrown in there. So I think the non-auto part of Tesla is starting to shine and is starting to actually produce meaningful profits. And I want to sort of like do the work on that and bring it to you guys. But anyway, thank you very much for watching, and I'll see you tomorrow for the breakdown of Q1 earnings.